Everyone thinks XRP's price just is what it is, that it's some natural market outcome driven by supply and demand or hype cycles or sentiment, but the truth is far more calculated than that. And once you understand what's actually happening under the surface, you're never going to look at the XRP chart the same way again, because XRP's price has never been random. It has never been accidental. It's been engineered, and I'm going to show you exactly how with real data, not opinions. But first, nothing in this video is financial advice. This is information to help you think differently, move differently, and position yourself intelligently. You make your own decisions. Welcome back to Blockchain of Raw, the place where we don't chase hype. We decode the architecture behind the next global financial system. If you're watching this right now, I need you to hit not for the algorithm, but because every person who understands what's coming strengthens the collective signal we are building. And comment the word unlock down below so I know you're part of the people who don't just watch the markets, you study them. Now, let's begin. For years, the loudest voices in the crypto space have repeated the same line about XRP. It can't hit $50. It can't hit $100. It can't hit $500. The market cap would be too big. That narrative became so widespread that even XRP holders started repeating it without ever doing the math themselves. But the problem is, the math they're using is wrong. The assumption that $1 flowing into XRP equals $1 added to market cap is not how crypto markets function. Crypto doesn't behave like stocks. It behaves like accelerated liquidity models. And the asset with the most efficient liquidity design in the entire crypto ecosystem is XRP. Recently, analysts Chad Steingraber and Zach Rector broke down live trading data that proves this. In a 30-minute window, just $4.78 million of net inflows moved XRP more than 5 cents. Not 500 million, not 5 billion, just a few million, moving the market as if hundreds of millions entered. When Zach ran the multiplier math on that movement, the number came out to roughly 5 to 98 times market cap expansion per dollar of inflow. That means small inflows don't create small moves, they create disproportionately large moves. Every dollar entering XRP behaves like $5 to $98 of market cap growth. That is engineered. That is not random. That is liquidity modeling. XRP is designed to move value fast, which means the liquidity pools are intentionally optimized to accelerate price movement when demand increases. So when people say XRP can't hit 3 digits because of market cap, what they're actually revealing is that they don't understand how order books, liquidity depth, and institutional routing actually work. Now, here's where the design becomes unmistakable. XRP's price has been intentionally suppressed through off-exchange accumulation. Institutions haven't been buying XRP from exchanges like you and me. They've been buying directly from Ripple through OTC agreements at stable pricing, so the market never sees the true demand. That's why the price feels like it's been stuck. It's not lack of demand, it's controlled distribution. But, and this is the part that almost no one realizes, Ripple's escrow supply is finite. Those quiet over-the-counter deals, they are only possible as long as Ripple still has tokens available to sell off-market. As the escrow winds down, institutions will no longer have the privilege of private accumulation. They will have to step into the same public order books as everyone else. And when that happens, the multiplier effect is no longer contained. Price is forced to reprick upward to match new liquidity requirements. This is the moment the market is quietly preparing for. Supply. Exhaustion meets institutional demand meets global settlement utility. The system has been built in silence while the crowd was distracted by price. But price was never the metric to watch. The metric was supply structure. The people who still think XRP needs $1 trillion of new capital to reach 3 digits are asleep at the wheel. The reality is that XRP doesn't need the world to invest in it. It just needs the world to use it. And once global settlement volume begins routing through XRP instead of correspondent banks and Nostro accounts, the revaluation won't be speculative. It will be structural. You are early, not because XRP is cheap, but because the world still believes the price represents the value. The truth is, the value is waiting to force the price to catch up. If you're still watching, comment unlocked so I know you're awake. And now we move into the part that changes everything. The moment the escrow dries up and institutions have to buy from the open market. The ignition point. The ignition point is the moment everything flips. Right now, institutions are able to accumulate XRP quietly because Ripple is still releasing tokens from escrow each month. That escrow supply is like a pressure valve. It allows the system to remain calm while the real players take their positions behind the scenes. But that valve is closing, and it is closing faster than most people realize. Month by month, that escrow balance shrinks. And once it's gone, there is no back channel, no quiet OTC deals, no stabilized acquisition. The only place left to acquire XRP will be the open market, the same order books you and I trade on. And that's where the multiplier effect goes from interesting to explosive. Because the open market does not have deep liquidity, the available supply at each price level is thin. That's why a few $1 million already push XRP multiple cents. Now imagine billions entering through institutions, banks, and settlement providers who need XRP to operate cross-border value transfers in real time. They won't be buying for speculation. They'll be buying because XRP will be the rails. And rails are not optional. If a bank needs to settle, it settles. If a corporation needs to move liquidity across borders, it moves. If a government needs to support CBDC interoperability, it executes. Demand becomes mechanical, not emotional. And mechanical demand hitting a thinning supply is not a bull run. It's a repricing event. This is the moment where everyone who measured XRP with retail logic gets blindsided because you cannot value a global settlement asset using the same models used for meme coins or layer 1 speculation tokens. XRP is not trying to be a store of value. It is not trying to be digital gold. It is not trying to be a speculative yield instrument. It is a transport layer, a bridge currency, a settlement engine, and automatic converter between digital economies. Money does not have to believe in XRP for XRP to function. It simply has to move through it. Once Ripplet corridors scale, once tokenized real-world assets begin transacting across borders, once CBDCs are live and interoperability is mandatory, the world is not going to ask, what's the price of XRP today? The world is going to ask, what volume can XRP handle in real time? And the answer to that question requires a far higher price, not for investor dreams, but for operational necessity. Liquidity scales with price. The higher the value of each XRP token, the more global economic throughput it can carry. So understand this clearly. XRP doesn't go higher because holders want to get rich. XRP goes higher because the system cannot function unless it does. And we are getting close to that moment because tokenization pilots are accelerating, CBDC networks are syncing, and interbank settlement messaging is already shifting into ISO 20022. The standard Ripple designed its architecture around before most people even knew what blockchain was. Everything was aligned years ago. You are just now starting to see the veil lift. Comment unlocked again if you're following this. The trigger isn't a headline. It's not a tweet. It's not some influencer screaming XRP to the moon. The trigger is when the system is forced to reveal what it has already been doing quietly. Right now, banks are running parallel rails. On one side, the old SWF model, slow, expensive, batch-settled, multi-day clearance. On the other side, test corridors and pilot payment channels running on on-demand liquidity. Both systems coexist for the moment because global infrastructure never switches all at once. It phases, it shadows, it mirrors. The moment Swift rails cannot clear fast enough to support globalized instant settlement economies, the switch flips. Because speed is not a luxury in modern finance. It's survival, and that moment is closer than anyone is prepared for. The rise of tokenized everything, bonds, treasuries, carbon credits, real estate notes, shipping contracts, is creating a volume of transactions that cannot settle through dated systems. We aren't talking about millions. We aren't talking about billions. We are talking trillions moving in real time across borders, across networks, across digital economies. And there is only one asset built from inception to serve as the neutral liquidity layer that connects those systems: XRP. Not because of hype, not because of a community slogan, not because of hope, but because nothing else fits the math. This is the moment where price doesn't rise because of speculation. Price rises because volume demands it. Every settlement needs liquidity. Every liquidity corridor needs depth. Every increase in global throughput requires XRP to be worth more so it can carry more value per transaction. Liquidity scales price. Price enables throughput. Throughput fuels institutional adoption. Adoption creates demand. Demand forces repricing. It is a closed-loop system with no emotional decision points. Once activated, it just runs. And when that loop turns on, the market won't move slowly. It will jump. Gaps, air pockets, no resistance, no time to position. That is why the people who wait for the breakout always miss the breakout. You don't buy after the global settlement network goes live. You are positioned before the liquidity engine starts breathing. So now we reach the part most people will never hear because they click off before the truth hits. XRP was never designed to be a trader coin. It was engineered to be a settlement foundation for a world that moves value the same way we already move information instantly globally without friction. The reason the price has been suppressed, misunderstood, and dismissed is because the system it was built for hasn't fully activated yet. But that system isn't hypothetical anymore. It's forming in real time. Tokenized markets are being rolled out. Cross-border corridors are live. Central bank pilots are advancing from testing to deployment. And the liquidity structure that was once hidden behind escrow and OTC agreements is thinning. The moment demand meets a supply that can no longer be cushioned behind private deals. Price will not climb. It will reprick. That is not speculation. That is how every asset transitions when its utility and liquidity role finally turn on. You don't get a warning. You don't get a countdown. You don't get time to react. It just happens. And the people who spent their days arguing on Twitter, chart hopping, panic selling, and chasing whatever coin was trending that week, they will watch it happen from the outside. But the ones who studied, the ones who understood, the ones who recognized that stability and silence are not failure, but accumulation. They will not be surprised. They will be prepared because they didn't bet on hype. They bet on the system. And the system is moving right now. If you're still here, if you understood every layer we just walked through, then you're not here by accident. You are early by design, but listen carefully. This is not financial advice. Stay rational. Stay strategic. Never invest more than you can afford to lose. Stay in control, but stay awake. Because when this flips, it flips fast. So, hit that like button. Subscribe if you haven't already, and drop the word source in the comments to let the world know you see what's coming before they do. This is Matrix Millionaire signing out. The next chapter is already loading.